edition of the London Session Open. Today is November 11th, 2019, and it's 4 minutes past 9:30 a.m. in London when we're doing this market update. We just had some UK data out, so we're going to take a look at the pound. Going to talk, of course, about the other markets as well and what's moving the markets. If you're totally new to this market update, it's a daily market update we do at 9:30 a.m. London time on investingcube.com, which is news site and analysis site. So if you're into currency trading, commodity trading, cryptocurrencies, then you should definitely check us out. We also post a lot on indices as well. So you got True Invention in the chat box. Good morning to you. Hope you're doing good. Anybody else that is watching, you're most welcome just to say hello in the chat box. That's always nice. And if you have questions as well, then you're most welcome just to put them there in the chat box. So let's begin with the pound then. So the pound, at least on the 5-minute, hasn't really moved too much. So we had a bit of a negative reaction of 17 pip immediately after the numbers were published. And I'm talking about the UK GDP numbers. So the actual outcome, let me see here what it was. So domestic, if you look at the year-on-year change in GDP for the third quarter, that was 1%, and that is slightly lower than the 1.1% projected. As well, if you look at the quarterly change just for the month, it was zero growth change, sorry, a growth of 0.3%. In the prior reading, the growth for the third quarter was negative 0.2, and now it's 0.3 positive. So overall, the UK has avoided what we call a technical recession. Of course, this data could be revised going forward, because this is just the first update for the GDP numbers, and most countries will have 3 updates. So it could effectively be revised. In fact, a lot of the data, hard data, we should call, it's actually revised, especially around these sensitive periods when the economy is, well, actually it can revise any time really. But for example, like numbers from the US at the last recession showed that the economy was doing really, really good, when in fact after a few revisions it indicated that there was actually in a recession. And it has to do with the way they operate with these numbers. They used past values and old indications to get an idea what's going to happen in the future. So what can we say about this technically then? Well, I guess it's quite good that the UK is not in a recession. That's a bit of a relief. And technically here though, the market did trade below this trend funding level, which was the 127.89 level. So the trend for now, at least technically, is bearish. And the best thing to do is just to align ourselves with the bearish momentum, because the euro versus the dollar as well is bearish. So what may happen now going forward? I think we could potentially have a bit of a corrective move. I mean, that would not be unsurprising. If we just take fib from the latest bull leg to the high here, if we go down to the first fib at 127, and then a 50% correction to 126, that would not be unsurprising. Might even go a little bit lower before this market turns higher. So the question is now then, which is the level that people are going to be focusing on to be bearish? In general, it's this level up here, which is the 29.77 level. And the same way we can use these Fibonacci's, we can use these Fibonacci's to get an idea of how much this market might correct. So if you put the fibs on like that, you can see we might go up to maybe 127.49. And this little area here before the market turns lower. So I think somewhere here would make sense. If you want to wait for a very more steeper correction, then you're looking at 128.50, and then I'll just look for a move to the downside like that. And as for the stop, it can be placed up here, but it could also be lowered a tiny bit to 78.6. That way we get a slightly better risk reward ratio. Euro USD, so the euro is moving upwards today, and this is maybe a bit of a prelude of what may actually happen with GBPUSD. So you got the euro versus the dollar going up and up and up and up, and eventually it took out this low, and I turned bearish from this low. And there was 2 scenarios. One could either just sell the break or a corrective move. As you can see here, the trading the breakout was better than trading the corrective move because we never really had enough of a correction. And if we take fibs now from the high to the low, then this is the breakup point, and also around this level you have the 50% correction level. So I think from that level people are gonna sell, and adding this in line with the GBPUSD, then yeah, I guess maybe the GBPUSD is gonna gain maybe at least to maybe 128.30, 28.40 before this, because this is gonna go up a bit the way it looks like, and that may help GBPUSD. And here as well, we technically this is the last major high, but if this is a genuine downtrend, it will probably just go up, and then it's gonna come back down again. So realistically, we don't need to put the stop loss up here. It's probably enough to put it up here. And then eventually, when the market indeed turns lower from here, I think it makes sense to probably take that stop, just put it just up here. Dollar yen. So dollar yen is under a bit of pressure, and the reason for this is quite straightforward. You're seeing a bit of a decline in stock markets, and especially in Asian stock markets. Hong Kong stock market is down with 2%, but some of the other markets are down a bit more. If you look right now in the futures markets, the US futures are down with maybe 45 to 34 basis points, whereas the German DAX is down with 0.5% at 49 basis points. And that's putting pressure on the dollar versus the Japanese yen. And we had a breakout here, so we have this inverse head and shoulders, which effectively still in play. So you can see that we had that breakout here. And as long as you trade above 107.87, this is going to be in play. In the short term, you have also this little low here at 108.60, and realistically the market should try to bottom out where we are and head higher. Of course, if it's a situation here where the stock markets tumble lower, then it's probably going to push itself a little bit lower here, and worst case take out this level before maybe bottoming out at the lower levels. As for stock markets, if we're talking about them, this is the German DAX, and the German DAX giving up some of its profits, which is perfectly fine. It had a nice little push over the last few weeks. We placed Fibonacci from the low to the high, and we said at least a 50% correction. Today I'm going to adjust this a bit, and we'll see a level between the 61.8 and the 50% correction, because it now looks like everything is sort of rather coordinated going lower, and we may have a slightly more declines before the week is over, and I'm still waiting for that corrective move. The level I'm looking at is 13,015. As for the S&P 500, the S&P 500 is on the other side of this upward sloping trend line. And when we take out one level, we usually go to the next level, which is up here. Not only that, we also have a move, or in a situation we have a massive ascending triangle. You link these two together from here to here, then you got that breakup point here, and that gives you this target of 3,210. So it's looking really encouraging for bulls, but realistically, you're looking at the other side, we're overbought. I did an update as well on the CNN Fear and Greed Index last week, which was just telling us the markets are super excited. Let's see if I can find that. So I would definitely be careful. You can scalp and trade short term. That's what we do here. But for long-term investors, look at that move. So this move here, this high here, this is CNN Fear and Greed Index. Look at about 7 different indicators to give you a nice little reading. And this indicator is very good with the lows, projecting lows. When the market was down a few months ago, I said, and this was reaching its low, I said keep a very close eye, because we can be about to hit a low. It's not very good at projecting major highs though, but I think we can still use it. You can see the reading is almost at 100. 100 is best reading. As well, I found this online, which is a little as an update, and you can see here the S&P 500, and then this is the AA bear index. It just shows you how bears are positions. This is a sentiment indicator that is a private one. You will need to pay for it, but this guy has shared this for free, And what's quite interesting here is that you can see that when the bears are at very low levels like here, it doesn't always have to mean that we're gonna have a major high, but we could have a high, because you can see here they were very pessimistic here. Market moved down a bit, but then obviously went upwards, double bottom in that index, and then the market went down, and then all the way up, and then around that level, and not equally low, and then that low here, and then again some low here. So potentially you're looking for some sort of reversal. As for the actual technicals as well, they're also, because the sentiment obviously is based on something else, and the CNN Fear and Greed Index has one technical component, but the other ones are less technical. It's more about order flows and stuff like that, positioning. And you can see here how the normal technicals with the RSI is a bit overbought. We're on the other side of the channel though, so above this November 6th low, we may go upwards and hit that red line, which acted as resistance here and here, and then you have that pattern. But I think let it go down ideally. If it goes down from down here, I think that would be a good little spot to consider buying and then targeting the highs. Crude oil and gold, what's going on there then? So crude oil is guided by this little channel. You got that channel moving upwards, and I think if we go down, I'm gonna lower this by the way, to the 61.8% correction level of the fib from this low to this high. I think from there, and then you got that little trend line. The actual trend line is pretty much down here. So around these two levels, I think that would make sense as well. I think if you, well, the RSI is actually not going to help us too much here, but buying at low levels makes perfect sense. When would that be challenged then? It will be challenged if stock markets don't decline, if they actually break out higher. And I didn't say it, but let me show it to you. With the S&P, if you really want to, if you know with your scalping, you're good with that, you know, as I said, above this low, we can go upwards. So if you're really keen on just trading short term, then being bullish above this level is something. The alternative, which is what I prefer, is just to wait for a correction. I don't want to get involved in these very short term setups unless I really feel strongly about them. Finally, gold prices. So gold prices are bearish. You might remember we're trading within this range, and the market just traded below support. And the breakout strategy would have worked good. Would have made a little bit on that. The market is not correcting back up towards that level. If we just put simple fib from the low to the high, you get these different levels. So if we get like a 50% correction up to the October 11 low at 1473.68, then I think the market is going to be bearish here. And I think the market will be bearish as long as it's trade below the November 7 high at 1492. Okay, let's see if you guys have any questions. I think I saw something here. So we have Marvin, good morning to you, sir. And we have Nikos as well, good morning. I hope you're doing good, and hope everybody that is watching is doing good, as well if you're watching the recording. So I got a question here. Can we take a look at the pound versus the New Zealand dollar? Sure, let's do that. Okay, so this is GBP versus the New Zealand dollar. So let's begin from the big picture. So from the big picture, you have a nice sort of, I wouldn't call it double bottom, but you have these two levels, which are clearly sort of, actually let's delete that. It's clearly the last major important low here, this one, right? And we're actually quite far away from that. In fact, we are, what is it, 9.12% away from that level. So 1,853 pip, which is quite a lot. And then you have this double top like pattern with the market. They tried to break the upside. And you have as well, this is a double bottom. You have the break here. These patterns are not as good, but what it does suggest is that the break here should give you the difference between these two levels. RSI wise, you know, pretty much got a nice divergence. as well. A high here is equal to this high here, more or less. If you look at it from a daily chart, the market is resting, taking a bit of a break. Looks a bit like GBP versus the USD, with the market just trading sideways. And then you have here like a, I think this would be a little trend line like that. So it's a bit of a descending triangle. So if we take the base here, what it suggests that if we trade below this low here, which happens to be the low from last week, Monday last week, then that could potentially generate a decline down to something like 196.81. So that's what I would be. I think that's interesting. The alternative is that we actually clear this high and move substantially higher. If you think all this is nonsense and you want to be a buyer, then you will be looking at buying very close to last week's low to get a good risk-reward ratio. The thing is that within this level and this level here, as long as you trade below that level, then we're probably going to trade sideways. We actually been trading sideways since October 22nd. Actually, let's call it October 17th. So Monday next week, that will be a full month of just trading sideways. Because the market, at least Forex markets, are right now a little bit boring. It's not like stock markets where they're really moving. In fact, even with crude oil prices, they're not really moving too much. They did have a nice bottoming out pattern here, but since Monday, they haven't really done anything. So you just need to be very selective, slightly longer term, unless you have the short term scalping working really good for you. In my situation, I just like to wait for the bigger setups and just let it go down, wait, and then buy. Alternatively, if it's a breakout, I do prefer breakouts, I'll go with them. Cool. You're welcome, Marvin. Okay, we're gonna wrap things up, guys. If you do have any questions during the day, you're most welcome to reach out to me. You do have this handle here to my Twitter at AlexFX00 as well. I would really appreciate if you can like the video, and don't forget to become a member as well of investingcube.com. About 50% of our content is locked, which effectively means that if you become a member, you'll have access to about 100% more content. We have a new analyst as well joining us, Angeline. She used to work for Baby Pips, and also used to work as a teacher for Learn to Trade. She has a wealth of experience, and she actually started to publish content really early this morning. So you'll see here that we have content already from, I think it's 3 p.m. actually, or 3 a.m. Yeah, first update was at 2 a.m. So we have quite a lot of content. This is Angeline. So make sure you join us, and if you like stuff, don't forget to share. It's really important that you do share our stuff. If you're on Twitter, you can just share. It's very straightforward. You like something, you click on it, and then you just there's a little button here. Let me see here. This one is a bit wrong actually, but you can click here on tweet. You can share on LinkedIn. You can share on Facebook. Because what's happened effectively is when you share, and our links is in different websites, different forums and stuff like that, then Google says, oh look, this is actually something that people are sharing because they like it. And then what happens is that Google will show our content higher ups. So when people search on Google, they will say, oh look, this content has been shared many times, so it's relevant. So if you do like this stuff and you do think it's relevant, then please share it, because that helps a lot with the site. Okay, we're gonna wrap things up. Guys, have a beautiful day and a good week, and I'll see you guys tomorrow, same time here on investingcube.com. Thank you, and bye-bye. Cheers.